Here's some tips and tricks on how to finance your short-term rental properties. What we're looking for is a really good property that's going to make a great short-term rental. It needs a little bit of work, and there's some value add that you can be done through renovations. We close on the deal with 90% of acquisition price and 100% of repair money, which is held back in a construction reserve. So that's like a standard fix and flip or bridge loan, right? So instead of putting down 25 or 30% of the purchase price, you're finding a value add property which is going to make a great short-term rental. You're running your RDNAs and doing all your analysis. Okay, so now if you buy it right, you only need 10% of your own funds plus closing costs. Next step is your furnishings, your appliances, all the stuff that needs to go in, your TVs, that needs to go into this short-term rental property. We get equipment financing for it. They'll fund up to 100% of all those costs. So let's say it's $10,000 to furnish this property. That's all included. So right now we only need 10% plus closing costs of the purchase price. Then another good tip here is to start working on building your business credit. And that doesn't mean going out and getting gas cards in the name of your business entity. It means really understanding business credit. I have a recommendation if you want to take a class on this. You basically get an entity, which we'll call a QFE or a qualified funding entity. And over time, you build lines of credit, you build business credit cards that don't show up in your personal credit report. This could be the source of your 10% down, your equity injection, plus your reserves and your carrying costs. Get the property furnished, you list it on Vrbo, Airbnb, you get 12 months of history, then you can refinance conventionally or with a DSCR loan. And or after 4 months of seasoning, most lenders, this is now what I'm talking about, seasoning, after 4 months of ownership, most lenders will let you use new appraised value in the DSCR space. So that's when we analyze, can we use this as a DSCR loan, not projection based, where they'll actually do a rental survey and would it qualify from a DSCR standpoint from the long-term rental rate. And that's just an addendum to the appraisal. It's called a rental survey. I think it's form 1007. So that's really how we're doing high leverage financing. So taking a step back, we got to look and keep our personal credit scores high. We only want top tier credit in our personal name. We want to build business credit in our qualified funding entity. We want to find a value add property that would make a great short-term rental. We want to leverage the financing from these fix and flip or bridge financing. We want to use financing for the furnishings and appliances using an equipment finance program. At the same time, we're building business credit where we can advance and if needed, use that money for the down payment eventually. So that's just a kind of a good thought process if you have very little capital and you're looking to grow your business. Additionally, I always tell people this, hey, you need people like me that can arrange these bridge loans and this creative financing, but you also need a stable of actual private lenders, individuals that have money that want to deploy capital into your deals that you can pay them a decent return and they're happy with that. And so if you have the combination of all this financing and you keep your personal credit as high as possible by keeping your utilization low but not getting too many inquiries, I think you got to learn how to play the game, right? If you can do this at a high level over time, you're going to build hundreds of thousands of dollars, hopefully, of business credit. And over time, you can utilize that, pay it off, utilize it, pay it off. And the importance of personal credit is on these DSCR loans, we don't need income, we don't need tax returns, but it's credit score driven. So if you have a 780 or better, you're going to get the best pricing possible on the takeout loans, right? Because DSCR loans are all based on credit score. So anyways, I hope you enjoy these kind of quick shows just on some strategies that are working for some of my clients, that work for myself, and hopefully they'll work for you at some point. But if you have any questions on financing or how to get started, you feel free to book a call below. Happy to jump on a free call with you and discuss some options. Okay, have a great day, and we'll see you on the next episode.
Hi, this is Beau Eckstein, host of the Investor Financing Podcast. Are you a real estate investor with properties and you're trying to figure out how to refinance or grow your existing real estate business? Need some clarity and a game plan for moving forward? I'm offering a free strategy call where we dive deep on your real estate investing goals. I'll help you come up with a strategic finance plan that will help you get to where you want to go. Whether you've got a portfolio of 30 properties or you're starting out with your first property, I have a framework that has helped many investors grow. If you're interested, book a call below in the Calendly link.